We're joined by the head of one of the United Arab Emirates' leading energy companies. He's Crescent Petroleum's CEO, Majid Jafar. Good morning. Nice to see you.
Morning, Majid.
Okay, let's deal with the easy question first. What's happening with oil?
Well, I think for the last few years we've had an unusually stable period. It was 110 for 4 years consistently, and then suddenly several things happened in combination last year. We had Chinese growth lower than expected and lower than it's been for a generation. We had OPEC obviously deciding not to react to that and effectively letting the US market, rather than government obviously, be the new swing producer and almost testing US shale oil and renewables and seeing what energy markets would do and refusing to cut. And we saw countries like Iraq and Libya last year producing more than expected, whereas this year already both of those countries have come down. And we've seen oil recover faster than many thought, even a month ago.
What happens next? I mean, you're talking,
yes.
These are things that we've been talking about day in, day out. OPEC wouldn't really budge about what they're targeting, but it is pretty clear that it is a stare-off competition between OPEC and the shale gas producers, where, you know, we've kind of lost control of the market. They've lost control. Is it going to remain volatile? Is it going to hover near 60 for the near future?
Yeah, I don't think they see it as losing control. They see it as they are the lower cost producers, and they shouldn't have to keep making space for the higher cost producer and losing market share, because that's what was happening. The reason prices were stable is because the drop in Middle East production, or the loss of market share from the Middle East, was being offset by rising production in North America. I don't see a change in OPEC's policy. The big question will be how much of US production comes off the market, and you know, there are some predictions that up to a third could come off the market at $50 a barrel if that remains the average. We're at 60 now with Brent, so perhaps prices are recovering faster than expected. I think the big shock, of course, was the speed of the fall and the impact that'll have on investments and on government budgets. It's a big transfer of wealth, potentially,
yep.
But the question is, who is going to benefit? I mean, there's talk of it being like a tax break. But in the US, for example, I would imagine in the short term a negative impact on growth, because a lot of that growth was being driven by energy jobs in states like Texas, whereas the saving from the tax break won't trickle out into the economy normally for at least a year until consumers are sure this is here to stay. And the big question will be how much of all that money that was raised for the shale oil revolution in the US will keep deploying, because it was on quite a momentum.
If there's a desire to get the rig count down out of the GCC, if there's a desire out of the GCC to get the rig count down in the States, where is the line, do you think? What price is the point at which we're uneconomic? Is it 50? Is it 60? Is it 70? Because if we get to 70 and suddenly a lot of these rigs are still economic, then we're in for a much longer term game. What is the view coming out of the GCC about this?
So obviously it's not consistent across the US, and different basins have different average costs.
Aggregated.
But what's different with the shale? Well, there are a lot of expectations that below $60 a barrel, a lot of that production is uneconomic. But what does that actually mean for shale oil? Because it's very easy to sort of react with the wells on and off depending on the price. It's more like manufacturing than it is traditional oil and gas, and the decline rates are extremely rapid. So you get big declines of 70 to 90% off those wells within a year.
But they come back on again. That's the thing.
If you want them to. So the market can react and adjust. From the Middle East's point of view, it's punching below its weight. I mean, we have half the world's oil and gas in the region, and you know, less than a third of oil production, less than a sixth of gas production. And it's the lowest cost. Our problems, of course, are above the ground. Political turmoil, conflicts in many oil-producing natures.
You know a lot about.
But actually, the bigger challenge we have is on the energy reforms that we need. We are the fastest growing market for energy. We're consuming too much.
Subsidies.
And subsidies, absolutely. I mean, half the world's energy subsidies, $250 billion dollars a year, are wasted in the Middle East.
Given the landscape that you've just painted in terms of crude outlook, about what we've seen, what does it mean for Crescent?
So our big investments in the region, in the UAE and Iraq, through our affiliate in Egypt, and we're seeing other interesting opportunities coming across the region. A lot of the US companies are leaving the international plays in general, and the Middle East first amongst them because of the turmoil. So for us, we see potential opportunities, actually, given the lower oil price, given the perception of risk in the area. Countries like Egypt reforming on the price side to give more incentives for investment. Doesn't make sense to pay only $2.30 for your gas while you might have to import at $10, and reforming the energy subsidies. That's absolutely critical.
Majid, thank you so much. Crescent Petroleum CEO there. Majid Jafar.